Greetings. So today is October the 6th, Thursday. It's roughly 11:16 a.m. So I want to share a trade with you guys that I got in this morning. And actually, this is the second trade that I got in. So earlier this morning, I put on a trade. I put on a put vertical credit spread. So obviously, I'm on the put side. This here is the call side. So anything over here are your puts. So I put on a vertical put spread. And I sold the 37.15 and I bought the 37.10. So that was 9:46 this morning, and I sold essentially, as you can see here, I sold 9 contracts for $20 each. Right? It says 20 cents, but every option contract controls 100 shares, so it's $20. So I took in $180 for that trade. However, around 10:12, let me just show you guys the. All right, so around 10:12 this morning, platform is acting kind of strange. So right around here, the price got down to 37.50. Right, so the price got down to about right here, and I was in this position here, and so my position started to lose money, and I became really uncomfortable, and I thought that the price would continue to fall, and so essentially I closed it out for $91 per contract. Right, so as you can see here, so I took in, when I sold the position, I took in $20 per contract for each contract that I sold. It was 9, and so because I had to, so when you close out a position early after you have sold it, you got to buy it back, and so I bought it back for more than what I sold it for, and so I lost money. Right, so I lost $630 on that trade that I was in this morning, when I got in at 9:46 and I got out at 10:12. Right, and so that was that position there. So I continued to look at the market internals, and I recognized that the price was pivoting and going back up, and so I put on a new position. I was here, remember, so I was here, and so now I went down even further away from the price of the underlying. So I put on a new position. I sold the 36.95 and I bought the 36.85, 5 contracts. And I sold those for $45 each. And so right now, I took in a credit of $225. And so right now I've made roughly 66% of that, or 71%. So I've made roughly $160 or $50 constantly changing there because the market is open. And so just keep in mind, I did lose 630 this morning on my first trade, right? But I'm looking to essentially, get most of that back, if not all of that back, before the market closes today. So I'm going to continue to watch the market off and on, and I'm going to consider putting on maybe an additional put credit spread, or I may add to the call side and put on a vertical call credit spread. But I haven't made that decision yet, so I will come back and give you guys an update as to what I've decided. All right, greetings. So I'm back. So it's roughly 12:21 p.m. As you can see here, here's the underlying conveyed by the circle here. The underlying here is SPX, and the current price is 37.57 and some change. So as you can see here, I decided to put on as I mentioned in the previous video segment, a call credit spread. Right, so I sold the 38 25, and I bought the 38.35 for 5 contracts. And so each vertical credit spread is symmetrical, meaning that they both have the same strike width. So it's 10. All right. So it's 10 on each side, and also it's 5 contracts on each side. So it's a symmetrical iron condor. So an iron condor is nothing but a vertical call credit spread and a vertical put credit spread. And so as you can see here, let me just look at the position. So I took in a credit of $350, and so far of that $350, I've made $135. So roughly 39% of that. All right, so I'm going to continue to monitor this this position. I'm also looking to put this this same position on in my other account on Thinkorswim. Haven't gotten filled yet, so I'm tracking that as well. So we'll come back in roughly about an hour or so and give you guys an update. All right, so I'm back. It's 1:27 p.m. So as you can see here, the underline is exactly where I need it to be, right in between the vertical put credit spread, where I sold the strike price of $36.95 and bought the $36.85, and then the vertical call credit spread, where I sold the $38.25 and the $38.35. Looking at the chart here, we can see that the Bollinger Bands are coming together. Let me move this out of the way. So we can see that the Bollinger Bands are coming together nicely. They're starting to narrow, if you will. So conveying that the movement of the underlying is going to stabilize. You know, the movement is going to decline. So you're not going to see much movement, at least at this point, as we are looking at the Bollinger Bands, but that could always change, you know, with some news event that comes out between now and 4:00 p.m. You know, could definitely alter the market significantly. But nevertheless, right now everything is pretty quiet. You know, go back and look at the So. And also, as I mentioned before, I put a similar position on in my Thinkorswim account, so that too is doing nicely. I will basically show you guys the position once the market closes. So as we can see here, of the $350 that I took in for selling this iron condor, which is again a vertical call credit spread and a vertical put credit spread, I have made thus far 67%. Which is $235. So I'm gonna let it ride. Probably should close it out, but I'm gonna let it ride because right now the market is being cooperative. You know, so there's not a lot of movement in the market, and so when there's not a lot of movement in the market, you know, having an iron condor on is a position that really benefits from the fact that, you know, the market is pretty much moving sideways at the moment. Okay, so I'll come back in about an hour or so to give you guys an update as to what is taking place. And just looking at, also before I go, we're looking at the market internals, the volume up and volume down indicator basically is conveying that, you know, the stocks that are going down have more trading volume going into them versus the stocks that are actually going up, right? And then we're looking at the advanced declining indicator for the New York Stock Exchange, so we can see that there are more stocks declining versus advancing on the New York Stock Exchange. That's conveyed here by the negative sign here. So, you know, so it's not surprising that the market is down. You know, but it's not down by much, a little over 17 points. So as I said before, the market is pretty quiet. So, you know, I expect this position to be profitable within the next 2.5 hours. So the market closes at 4 o'clock p.m. You guys know that by now. So yes, I'll come back in about an hour or so to give you guys an update as to how the position is doing. Oh yeah, and real quick, I forgot to mention, somebody sent me an email asking what does this brown bar represent. So this brown bar represents the expected move of the underlying. So, and it also corresponds to this value here. So the platform is expecting a plus or minus 20-point movement from, from the SPX. Now, this platform is the only platform that I know of that has this this measurement bar here, this bar that measures the expected move. So I do have a Thinkorswim account, so they don't have this on Thinkorswim or on the other platforms that I've seen like E-Trade and Fidelity. So yeah, so that's the expected movement of the underlying. All right, I'm back. So it's roughly 10 minutes after 3. So we got roughly 50 minutes before the market closes. Let me put my mic on here. So roughly 50 minutes before the market closes. Let me pull up my pointer here. So as you can see, the price of the underlying has moved down a little bit. So it's down roughly 40 points. The 37.43 is some change conveyed by this circle here. It's not really close to the price or the strike prices of my put credit spread. But nevertheless, it is moving down. We do have pretty much every sector that makes up the S&P 500 in the red, with the exception of XLE, which is the energy sector. So it's not surprising that the market is down, right? But nevertheless, our position, or my position, I should say, our position is looking good. The call credit spread is way out of the money. As you can see here, it's way away from the price of SPX. But SPX nonetheless is moving down. Now it's down 44 points. Let's just look at a 1 minute chart here. So we can see here that the Bollinger Band is starting to give away to the declining or decreasing price of SPX. But nevertheless, I suspect that it won't reach my put strike of 36.95 within the next 50 minutes. As you can see here, the price, the credit which I took in was 350. So I'm at 87% of that now. So I've made $305 on that on my position here. So yeah, I'm just gonna let it ride out. As you can see, the price is starting to come back up again. So I'm just gonna let it ride out. We can see that the expected movement has declined as well. It was, I think, at around 20 something, plus or minus 20 something during the last video segment. As you can see here, it's roughly plus or minus 14 now, some change. So yeah, I think we're looking good. I'll come back right before the market closes and give you guys the final update. All right, so I'm back with the last update. So it's approximately 3:45, 15 minutes before the market closes. So as you can see here, the position is, both of my positions are out of the money. Let me just clear this out real quick. So as you can see here, here's my vertical put credit spread. It's way out of the money. And here's my vertical call spread. So it's an iron condor. The price is right in between the strike prices of 38.25 on the call side and 36.95 on the put side. If we look at the P&L, we can see that I've made the $350 that I took in as a credit for selling the iron condor. And also in my other account, I've made had a small position on where I made $165. However, keep in mind that I did lose $630 earlier today when I had a position on the put side. I had a vertical put credit spread on at 37.15 and 37.10. And although the price of SPX was dropping, and this position that I had on earlier was actually losing money, I decided to close it out early and cut my losses because I wasn't sure whether or not the position or the underlying was going to continue to drop and potentially drop below both of my strike prices of 37.15 and 37.10. So it's really important, when you are, day trading or trading in general, to remove your ego and understand that sometimes you will be wrong, and sometimes you will close out at the position before it actually becomes a total loss. So in spite of the fact that the price of the underlying never dropped below my strike prices of 37.15 and 37.10, I was still losing because of the proximity of the price to my strike prices. And so, I decided to cut the position because I know that, I can always make the money back. So I did lose 630. So overall today, my net loss is $115. So not bad at all.